Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Amanda Lynam takes an accounting approach to fixed income. She's in macro credit research at BlackRock, which is an important point, and that's important today, particularly with what we see in markets moving. We're going to do some politics with Zach Cohen here in 15 minutes. Amanda, I look at the way the markets are moving, and there's got to be a signal here. I got Atlanta GDP now off good consumption yesterday, popping a solid economy, 2.x%, 2.3, 2.4%, whatever. I got global deflation, disinflation. I got a soggy IMF report. Within that arching theme, why is it price up, yield down right now?
Good morning. Thank you for having me. All right. So this environment of above trend growth has actually provided a rally to lower quality within the corporate credit. I think is important. It's mirroring what you're seeing in the equity market, where you've had small caps outperform recently, and it's been striking. I think one of the themes that we've had over actually the past several months has been dispersion, but not widespread market disruption. We've noted the importance of the growth backdrop in giving corporates the ability to navigate a higher cost of capital.
Issuance?
What's actually really interesting, I was reading through the large bank transcripts. They've basically said that 1Q and 2Q both are a pull forward from later this year. I think that makes a lot of sense given the event risk. So we're tracking at this pace well above last year's level, but it seems there's an expectation from the large banks that that's going to slow down in the second half of the year.
I mean, about 4.18% on the 10-year yield. We're not that far from 3.99%.
I know, we're on that watch. I look at the INGO function on the Bloomberg terminal for the Bloomberg Index browser. Far and away, high yield is the best performance this year to date. It was similarly last year as well. People aren't too concerned about an economic slowdown, it doesn't seem like.
Right, and also the yield environment, the elevated risk-free rate gives you a bit of a cushion because you've got an all-in yield that is pretty attractive by historical standards. So even if you do have ongoing normalization of losses, which we're seeing across credit, consumer, commercial real estate, right? You're seeing that across a lot of different asset classes. It absorbs a lot of the ability. The one thing I will say, though, it's really difficult to invest at the index yield, right? That the high yield market is very bifurcated at the moment. It has been for some time, where you've got a big chunk of the index actually trading well inside of 200 spread, right? The index is at 303 or something like that. You've got a big chunk of the index that's well tight of that. You've got a big chunk of the index that's actually kind of in distressed territory. Well, I would say a smaller part of the index that's in distressed territory. It all comes out kind of in the wash of an index level metric, but it's hard to deploy capital there. So it really does, I think that sweet spot of single Bs is probably where you want to focus, because outside of like that single B range, it's actually quite tight.
So where else in credit do you find I'm not sure if it's even value these days.
I think floating rate products still offers a fair amount of relative value. The curve is still inverted. So being in short duration, floating rate product does allow you to pick up some yield. In the leveraged finance market, this trade-off between leveraged loans and high yield bonds has been very, very topical. I would say on net, it still skews in favor of leveraged loans, but it's becoming more balanced.
How big is that market, the leveraged loan?
Leveraged loan market is $1.4 trillion in the U.S. It's actually roughly the same size as the U.S. high yield bond market. So it's for sure a sizable institutional asset class. For a lot of folks that want to build in some structural protections, they'll migrate up into, say, AAA rated CLOs, for example. But the technicals across credit have been incredibly strong. So even though we've had a lot of issuance, it's been extremely well absorbed, especially in high yield and leveraged loans where most of it's refinancing related. It's not a lot of kind of leveraged M&A.
Can you explain why tech doesn't want to issue exceptionally inexpensive bills, notes, and bonds?
Well, I think that industry, alongside certain parts of pharma, it's already kind of cash rich, right? So they're generating a ton of cash. They have a lot of cash.
But it's dirt cheap.
I do think if I'm a CFO or treasurer, the prudent thing to do is to build in some extra cushion in terms of refinancing and pre-funding maturities years in advance. In high yield, for example, we're seeing corporates pre-funding late 2025 and 2026 maturities. Wow. So they're well ahead of schedule, and I think it's prudent. I think that's the right thing to do.
You go outside your remit. Then how do you respond to the gloom crew? Because I'm not hearing the gloom crew from Amanda this morning. Paul.
Well, yeah, I think the gloom crew exists in isolation. The consumer is bifurcated. So in aggregate, retail spending sales, for example, yesterday were very strong in aggregate. Mm-hmm. But you are seeing bifurcation within the consumer. Yeah. You are seeing, I would say, pockets of stress. But for the past few quarters, we have not been in a recession kind of base case scenario. So we've been pushing back against that as well.
Thank you for getting us started. With Mark, we have to remind ourselves, forget about Milwaukee. Markets are moving.
Yeah, absolutely.
Amanda Lynam with us. This summer of 2024 in journalism, there is no one under greater scrutiny than Brad Stone. He's editor of Bloomberg Businessweek, and he's done the impossible. He launched a monthly Bloomberg Businessweek, and I do agree to keep the name Businessweek. You have to from our childhood. And he hit the ball deep to left field. In the Red Sox terminology, Brad Stone, it's over the wall, over the turnpike, over the cask and flagon, with a thick, readable magazine centered around Arnault and Louis Vuitton and Tiffany and such. To do it again a month later is extraordinary. And last night, Mr. Stone and his team launched a new Bloomberg Businessweek issue with Donald Trump on the cover. Brad, congratulations. Before we get to the Trump interview on Jerome Powell and so much, what is the thrust of the new monthly Bloomberg Businessweek? What is the Brad Stone message to your troops?
Well, first of all, Tom, thank you. And, I'm from Cleveland, so really that ball's landing on East 9th Street. But I appreciate it. Look, it's a monthly magazine. We got 12 cracks at that cover story a year. We want an iconic business leader or political leader or personality, business personality on that cover. We're aiming high. So, yeah, Bernard Arnault was setting the standard with the first issue. Obviously, the Olympics going to Paris, and he's one of the wealthiest people in the world, very poorly understood. For the second issue, we put letters out to both campaigns asking for time with each candidate. The Trump campaign responded, and I went down there with Mario Parker, our wonderful editor, Nancy Cook, and Josh Green.
What was the distinction? What did you learn from Mr. Trump? What was the singular surprise in Florida?
Well, we can get into the details of what he said, but of course, I had never met President Trump in person, and I have to say, when you put him in front of a camera or in front of a crowd, he speaks with a great sense of grievance, particularly with regards to the media. And I think the biggest surprise was in person. He's solicitous. He tries to play the host. He wanted. Look, this is no great insight into the psychology of someone we've all been studying for over a decade, but he wants people to like him. I showed him the Arnault cover, and he wanted to know if Arnault had said anything about him, if he was on his side, so to speak. And of course, I told him that I'd written 2 books about Amazon and Jeff Bezos, and he wanted to know.
That must have gone well.
Yeah, well, no. In the interview, of course, he rails against the Washington Post. As I was chatting with him afterwards, he wanted to know if Lauren Sanchez, Bezos' fiance, was a Trump fan. So that might tell you a little bit more about he's calculating who's on his team and who's not.
Right.
Brad, what did you learn about what the president may envision if he were to get a second term?
Right. And back to Tom's first question, our lane is business and the economy. And so we went down there with a very specific mission to ask him about Trumponomics, what it meant, what his plans were beyond, some of the very broad strokes that have allowed proxies to come in with things like Project 2025 or a white paper saying that He would curb the independence of the Federal Reserve. And in some respects, he corrected the record. He said Jerome Powell that he'd let him serve out his full term to May 2026 as chairman. He kind of caveated that if I like what he's doing. He said that he could consider Jamie Dimon for Treasury Secretary. And then in terms of the broad strokes, it's an unorthodox economic plan because he's attacking inflation, but then he talks about 10% tariffs across the board, maybe 100% tariffs for China, lowering the corporate tax rate. He said even maybe to 15%. He likes big round numbers. Shutting down immigration at the border, which would, of course, tighten an already tight labor market and maybe raise wages and then potentially raise prices. So, there's some contradiction there.
Where is corporate America, do you think, vis-a-vis Donald Trump? Or maybe how does Donald Trump view corporate America and the support that are they on his team? Are they not on his team?
Yeah, thanks, Paul. I mean, so first of all, we did ask him, and I have to say this was June 25th in Mar-a-Lago, so 2 days before the debate and almost 2 weeks before the assassination attempt. And at the time, you really had no one. And we quizzed him on that, and he kind of bristled. He said that the meeting with the Business Roundtable, despite what had been reported, was a love fest. He said they like you when you're leading, which was an interesting sort of glimmer of self-awareness from him.
Yeah.
But, in terms of where they are, I think there are two places. One, there's kind of explicit and contrarian support among some business leaders in Silicon Valley, like Elon Musk recently. And then there's quiet. And I wrote my editor's letter about this. And other than, some maybe braver individuals, Reid Hoffman, the executive chairman of LinkedIn, et cetera, they're keeping their nose down because this is a president who was, a bit vindictive towards perceived enemies. And he still brings up Mark Zuckerberg of Facebook, because he believes he got wronged by Zuckerberg after January 6th when he was kicked off the platform. So there's really no game in it for business leaders to kind of take a side, particularly if they're running a big public company and have an obligation to the shareholders.
Brad, we got to get you on for like a 1 hour interview, 3 hour interview. I got to get you questions. Let me go back to James Dimon. Brad, your take here, and of course with your world-class ownership of the Amazon story, I've sat 7 feet behind Donald Trump as he spoke to the business elite of Wall Street at the Economic Club of New York. You're telling me Secretary Dimon is going to listen to Donald Trump? Help me with that.
Well, it's funny because one of the things that he did say when we said, what would be different this time around with the suggestion that, he sort of, killed himself with his own chaos and, unpredictability the last time around. And what his big revelation was, well, this time I know everyone. I'm more experienced. And he even said that, he made some mistakes last time, that he selected some people. And of course, now we know who they are, leading right up to the former vice president who ultimately were not with him. So he'd surround him with sycophants. So I do think it's a good, this is what he said, that Jamie Dimon, he'd wanted him in his administration, or Glenn Youngkin. But it's a great question. Why would they do that, considering where so many of those cabinet members ended up the last time around?
Brad, thank you so much. James Stravridis. He joined the U.S. Navy when it was the least popular thing to do in our modern lifetimes. I'm going to guess 1975. His first ship was out of San Diego with the Padres in the background and went across the Pacific Ocean and beyond. He's a former Supreme Commander of NATO. Too short a visit today with James Stravridis. I want you to discuss, James, I don't know if you heard it, but as we were coming into us, we were speaking of the Chicago Tribune isolationism, which is comfort for Senator Vance. To explain to Republicans that isolationism just doesn't work.
3 reasons. One, let's look at history. Late 20s, we tried this. We walked away from the League of Nations. We built enormous tariff barriers, the Hawley-Smoot tariffs. We isolated from the world. How did that work out? We cracked the global economy. You can drop a plumb line to fascism. So history is instructive. Number two, we're so globally interconnected economically that trying to simply walk away from the world in a geopolitical sense will crack those relationships and leave Russia free to operate and do what it wants, to quote somebody, in Europe, or China to do the same in Asia. So the trade, the economics, and third, and maybe most important, it's the values. If we isolate ourselves, the jungle will grow back, and democracy, liberty, freedom, all of the things we cherish will be at risk. I think those are the three key arguments, Tom.
So, Admiral, what is your view at this stage about how a second Trump presidency would unfold in terms of, some of our geopolitical military policies?
Well, we just discussed the big concern would be isolationism, would be anti-interventionism, if you will, a sense that, hey, let's just come home, let's not worry about the world. Again, we've tried that. It won't work. It fails in a number of reasons. So isolationism concerns me. Second is the generally erratic nature of foreign policy in Trump 1. 1 minute, we're going to attack North Korea. Little Rocket Man is enemy number one. The next minute, we're doing love letters with President Xi of China. We're erecting big tariff barriers. But right before that, he comes to Mar-a-Lago for a wonderful, friendly dinner. All of that erratic behavior, I think, is very concerning. And then third and finally, it's and it's connected to the first one, it's the divisiveness that this will probably engender here at home, which weakens us abroad.
Admiral, in the time we've got left with you, it's easy to go to Ukraine. We'll do that with you. I hope we can get another conversation on Ukraine soon, Admiral Stravridis. I want to go to the real world, and this is the Stravridis world. It's not the romance. It's like 100-degree heat, and you're out in the ocean. You're going, where am I? Jim, it's the exercise Tiger Triumph 2024 between India and the United States of America in the middle of nowhere in the Indian Ocean. And the answer is we've got people at risk there. The 5th Marine Expeditionary Unit, the P-8A Poseidon Maritime Patrol, etc. I'd suggest most Americans don't even understand we're in the Indian Ocean.
The Indian Ocean is going to be a key economic area. India is growing powerfully. When the history of this century is written 200 years from now, it won't be about the rise of China. It'll be about the rise of India. So the more the United States operates, engages with India, and by the way, brings along Japan and Australia to create that quad alliance structure in the Pacific, the better off we'll be. I think.
Well, I'm going to interrupt because we're running out of time. Admiral Stravridis, it's simple. You're going to bring along Japan. How do you bring along the Republican Party?
Well, I'll say it's easier to bring along Japan because they're facing real threats right in front of them from China and North Korea. The way you bring along the Republican Party is doing exactly what we're doing now, Tom. It's having the conversation, it's persuasion, it is showing the facts and doing it all in a civil, sensible way that gets us out of this politics of violence and back to a politics of intellectual discussion and policy.
James Stravridis, thank you so much. Okay, Lisa, the YouTube world, everybody on live chat, they want to know, are you playing pickleball?
Yeah. You know what? I haven't tried it. I'm not even a tennis person, but I hear it's very good exercise. I don't know. That's it.
It seems to be. I mean, but the big thing
everywhere.
is it's easy to play, easy to be competitive, and that kind of thing. So, okay.
I mean, it's not like tennis where you go.
Well, the tennis folks are I think they're very concerned because they're like, it's taking over all our courts.
Yes, but it's like this battle between, my mom's a tennis player and pickleball. Pshaw. Like, come on.
So what do you got today with our newspapers?
Okay, this, Paul, is a big one for you. Disney exploring ways to be a little bit more like Netflix. Oh. So their goal, not just to attract more subscribers to like Disney Plus, Hulu, ESPN Plus, but also to get them to spend more time watching.
Spent watching.
Yes, they want them to stay on longer. So how they're going to do that, they're going to have some live channels that are going to be introduced for people who can't decide what to watch. And then for viewers who, sometimes I do this, but you bail on a series in the middle of watching it, you give up on it, now they're going to start sending you reminder emails. Like, hey, yes, you're going to be haunted by the reminder emails. Like, hey, you stopped watching this series, Mandalorian or whatever. Time to come back. So expect that in the next 6 months.
Paul, to that beautiful summary from Lisa, they're just desperate. That's all there is to it.
Well, I think they're trying to... They're desperate to try to get to the profitability and the margins of Netflix. And one of the ways you're going to get there is through advertising. And so, as you know, Tom, advertising is your total audience and how much time they kind of spend on your
I'm huge.
service.
Everybody knows that. And I'm just beyond honored, folks, at the time spent listening data that my vast management staff is giving me. I mean, I'm humbled by time spent listening of Bloomberg surveillance. What do you got next?
Okay, this one, it's going to get you fired up. I know it. Okay, Amazon is cracking down on coffee badging.
Oh, I saw
Do you know what coffee badging is? It is when an employee badges in, they get a cup of coffee, and then they badge out just to say that they made the mandate. They came into the office.
Michael Barr used to do that. Just everybody knows this. Michael Barr sits closer to Mr. Bloomberg than anyone in the company. And Mike one day caught Barr coffee badging.
He comes in at 2 a.m.
Went away.
Michael Barr badges in at 2 a.m., maybe badges out at 2:45.
2:45.
Right. He's back in the Poconos.
Are you kidding me? And
yes. So this is Business Insider, but now they're changing it. So now what Amazon is telling their employees is that they want you to stay a minimum of 2 to 6 hours per visit. So they didn't have this mandate before. It's out of control.
Paul,
I know.
You're like the only legitimate manager in the room, folks, is P. Sweeney. So we're down to return to office. It's a 2-hour workday.
That's what.
Is that what I just
Amazon?
heard?
For Amazon, I guess. I mean, what happened to the 8-hour day? Is that now also?
I don't know.
No, what happened to you? Come out of college.
Yes.
You want to go. You're in the office 5 days a week, and your short day is 9.5 hours.
Exactly.
That's like religion.
I mean, if you get out in time that the bars are still open, they can get a beer with your friends before it's like 2 a.m.
The other day, Sunday, with this terrible assassination attempt, I did a 16-hour day.
Yes.
And one of the young kids is like, oh, my God, are you okay? And I said, we used to do this, not every day, but routinely.
Yeah.
We used to do 12, 13-hour days.
Yeah.
Double shifts.
Double shifts I would do.
Next.
It's hybrid.
We're fired up, folks.
I know. Oh, this one's going to continue getting you fired up. Okay. This one is from the Wall Street Journal. It has this insight into how shoppers are hiding their purchases from their partners. So let's say, I don't know, Mrs. Keene goes on a shopping spree, and it says let's pretend. It talks about how said person would go about hiding these packages, okay? So some of the things they do, they enter through the back door, they shove the packages in the coat closet, behind the armoire, in the laundry basket, and then when the husband is asleep, or the spouse, it could be the wife, they put away the haul. So this is one of the things they're doing.
Like a solid marriage.
They're also putting things on and wearing them and just saying, oh, you don't remember this? I've had it for like 10 years. You don't remember this pocketbook? I've had it for like 5 years.
I am so guilty of this.
Oh, you do it.
Oh, yeah. I just acquired, Good Morning Flint, Michigan, a very rare, beautifully made Hofner Beetle bass from the Cavern days. It's a replica of the Beetle bass that Paul McCartney lost. It's the most desirable used guitar in the world, and this is a replica of it. And that puppy snuck in the apartment like nothing. What do you got next?
And finally, yes, 2 weeks, almost less than 2 weeks before the Paris Olympics, the mayor of the city did, take a dip into the Seine River. Yes. She wore a wetsuit. She put the goggles on. She did a mix of the crawl and the breaststroke, okay? She was joined by some government officials, some local swimmers, and she said, this is Paris Mayor Anne Hidalgo, said that the Seine is exquisite. That's her exact words as she was paddling in the water. But you know the background of it, right? The water tests in early June showed unsafe levels of bacteria.
Who's the evil elf in The Hobbit? Who's the... Or Harry Potter.
Yes.
The evil elf.
Yes.
There's somebody out on YouTube, some snark video, and the mayor gets out of the river, and it's the elf in The Hobbit or whatever.
That's what they look like.
We're busting Katie Greifeld. Hey, folks, somebody emailed me. They said, is she really going to have Gus swim the River Seine? And I said, no, we're kidding.
But
are they going to
swim?
do
this, I think,
are they going to do it?
I think so.
What? Are they going to
have this...
The opening ceremonies are there.
But are they going to swim in it as part of the race, the triathlon or whatever it is?
Don't know yet.
All right. I think they are.
We'll see. But the mayor's trying to say, hey, if I did it, everybody can do it.
Lisa Mateo with the newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.